learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming into May 15th, 2020, and the stock market is going to go crazy. Yes, I said it, and it might happen tomorrow, but not really. And what I'm expecting is the market to go crazy for what I believe could be the next wave, and we saw a little bit of it today with the bank stocks. I'll tell you, I'm not going to make you wait. We're going to get into this, but I think we might see dividend cuts come on some of the banks, and that could be something that could make the markets go a little crazy. But I was expecting the market to be more calm this week, and it really hasn't been. I mean, we'll see where we end up, and if you look at the 3-day change, or if we want to look at the 7-day change, but there's more and more developments. There's a lot of different things happening. Volatility is going up, even some of the premiums. So we have a lot to talk about. I want to go over pretty much specifically the banks, bonds, the Fed, China, and the jobs report. And then I have 3 different plays that I'm going to go over. I made 2 of them. However, if you have the ability to trade daily options, which are extremely risky, so as option traders, and please don't trade anything on here. I'm documenting this so you can learn from my mistakes. But I made these plays, but I'm also going to be looking at them again tomorrow, as they'll be dailies, but they're risky. Went with small amounts. We had a good talk about that on the stream today. And yeah, that's pretty much it. I'm excited for these plays, and then even with what's going on with the bank stock. So let us not delay. Let us get right into it. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/thestockmarket. Yes, you could post the plays, source the info, everything. I'm sorry. I'm really, really hyped. I hope you got some rest. I hope you're smiling. I hope you're ready for Froggy Friday. I might say you bring a friend to Cult Day tomorrow. Good luck and good wellings. I don't even know what that means. But right off the bat, the first thing, again, banks, bonds, Fed, China, jobs. That is what happened today. We saw the bank stocks soar, and I kind of gave you that a little bit. Well, we're going to discuss that more. But bank stocks went up when the market was down, but then the market ended up bouncing up today. Even this morning, we did have a pretty big sell-off, and it was actually surprising, very large, and we didn't really feel it. But this was a pretty big move, and again, it was coming to that 275 level, which is a pretty key point. But even while we were going down, the bank stocks were doing very good. And there were some rumors about like Wells Fargo and JP Morgan. I think they are exactly that, rumors. Nonetheless, a lot of the bank stocks went up. But then the next thing, bonds, a lot of money rushed into bonds. So if you watch TLT, and then now even LQD and HYG, we'll talk about those, but bonds are important. The Fed has now started to purchase them, and even the Fed balance sheet numbers, I believe they came out today, but it has greatly increased, and one of those purchases that shows up on that balance sheet is ETF, so that'd be LQD and HYG. We'll talk about that, but the bonds made a move today, and people were kind of worried, and a few other things happened throughout the globe. Again, currencies, Mexico cut their rates, the peso made some moves. Oil has been, we haven't really looked at oil if you think about it. Let me get it up here. There you go. Oil at 28. So again, the oil had a nice bounce and it went with the market. Now, do you even see this? That's our China, and that's the Chinese divergence. So I'm pretty sure once we see oil in the market start to converge, that may very well be our move. But one thing I think that could end up causing that, like I said, with the bank stocks, but we'll talk about that. But now was the Fed. There was a few things. It was both Kashkari and then now the Fed funds rate and what we've been looking at here. So it did, some people were saying that a lot of people were betting on negative rates, and I disagree with that. I think it only went up on the July ones, but every other one dropped. So the market actually kept the expectation from yesterday the same, but it didn't go further. It only did on the July forward contracts, which was very interesting. We'll see. But again, keep these timelines in mind, as these could even kind of dictate how we're going to be playing these plays, or give us a map to it. But then next thing was China. The rhetoric stepped up again. More and more of those seeds we talked about with that negative relationship sentiment. I don't really know what to call it there, but we've been seeing this escalate. And even today, Trump said, we could call off the whole entire relationship or something along that line. And then finally, you got the jobs report, another bad jobs report, and another stock market rip. Every single jobs report so far in the middle of this, the market has ended with a positive gain off of an awful print. So get used to it, understand it. But again, view where we are in the quarter. And if I could even leave you with one thing, we discussed this on the stream today. And I think this is just a very, very great reminder as to why the market does what it does, where it's at. People are tagging me in the memes. It's like the big building and it's falling over, and it's like the Fed, Trump, and some other things like holding it up. And you don't have to get too crazy about it. And it's a good laugh. But in general, what I'm saying here is when you look at the market, it makes sense. But this isn't a representation of the economy. This is a representation of corporate profits. So we had a good talk on consumers, and there's consumers and there's people who spend money, but then there's businesses and entities, and they're different. But this is showing you what profits pretty much. We dropped when people were expecting a plunging profit. Once we got a better idea, that's where it's at. And it really explains even what happened with this earnings season. Profits did go down in some companies. They didn't make as much money, but they're still doing a large amount of money, especially compared to a few years ago. So keep that in mind with looking at everything. But now with how we've been seeing volatility and where things are going to be going, bank stocks are going to be the one I want to watch. So they went up today. That was important. There's all that stuff. But watch Wells Fargo. They've been the weakest U.S. one, or any of these bank stocks. I think Wells Fargo might be the first one to cut dividends. And this is bad because this whole time, even from the beginning, if you remember a few months ago, all of the bank stocks, I think it was even the Fed or someone else, I think it was even Jamie Dimon, but they were talking about why they don't want to cut dividends, because that is a very, very, very bad sign for a bank. They don't want to hurt confidence, because now it's a weird paradox. I mean, imagine you not only invest in the bank, but imagine you get dividends from Wells Fargo. But what if you keep money with them? And what does that say? And that could even just from a panic perspective, I don't even want to say the word panic, but more so just how people view it. It's not a good show of confidence at all, especially for banks, as according to Powell, that are extremely well, funded, and that they have ample reserves, so on and so forth. But that's something to watch for. And why I'm saying this, because again, the bank stocks didn't get any of this rebound. They've still been in there. The prices in the market is saying something about that. But now as more and more time goes on, it's going to start getting to that point. So I think that could be the next shock. If it's not going to be a wave of bankruptcies, it's going to be a wave of dividend cuts again, but now this time in industries that really shouldn't cut dividends, or that were a lot more solid than we thought. And again, now, and like that's a very key right there, than we thought, because if people are expecting something and something action like that occurs, it changes a lot. That's a surprise. And think about what that will do to valuations and stock prices. But finally, Kashkari, like you said, he said watch bonds. He says he gives more credit to the bond market telling you what's going on. And this is one of the people on the Fed board. But he also said that there's going to be no V-shaped recovery, and he said the chances of that are pretty gone. He was very, very bearish, actually. And Kashkari is interesting. If you ever watched, I forgot what movie. There's a replay of it, but he's very smart, and he has some stuff. Sometimes he's kind of more extreme with stuff. However, very, very bearish today. And then finally, coming into tomorrow, watch for crazy Friday developments. And I'm even saying just like one of these like weird moves, and you've seen it before, where it's like it's Friday, the market just started picking up in volatility, and then it's going to kind of make a move, be super, super calm, and either not respond to news, or like news is going to start coming out, or maybe this market drops and there's going to be like, a special press conference or something, or maybe even dividend cuts or something, or like I'm even expecting with one of the plays like Uber, maybe deal news comes out. And I'm saying watch for it, just because again, when you get moves like this throughout the week, you might see something, and this will even tell us, are we entering another wave, or how's that going to play out? So watching how we close this week, and then if we get it down Friday, and then again down Friday, down Monday, coming into next week, that will tell us a lot. So I hope you guys are ready. It's going to be exciting, but let us get into the plays. So right off the bat, 3 plays I made. I made one on the small account. We got a small Robinhood with $250 in it. I made a play. I went a little bit big. I should have probably only did $6 or $12. Yes, the price of a Chick-fil-A Lord's Chicken meal, baby. Amen. And that's something, again, if you're trading a small account, when I trade the small account, that's something I should have did, and I made that mistake, and I did it. But what I did is I went after these weeklies on Robinhood. Again, a weekly's risky, and this doesn't meet the strategy. Don't get it twisted. It's a small account, and I'm doing this, but it's gambling. So, if you're going to try to follow along or replicate or understand, I'm gambling with $250. So if you saved up this $250, $200, whatever, and it means a lot to you, and you want a serious shot at investing, and you want to really snipe a play and do good, weeklies aren't going to be your play. So get more time on them, and this isn't the one you want to do. So same thing with all of these plays, maybe, and again, even now on a small account, like let's say out of all the 3 plays I'm going to go over, and I made 2 of them, and why I did them today was because Robinhood doesn't let you trade these daily, so by getting them today, I was like, well, I could go in small, we could scale in a little bit and then see what happens, or if what I'm expecting happens, we could profit off that. But out of all these plays, like Wells Fargo or playing like a swing trade, like I'm saying, getting a few months of time playing one of these bank stocks or playing, you see coming up with the thesis or waiting and finding something like that, but a swing trade with time, way better use of $50 on a $200 account than going after a $50 play that's going to expire tomorrow. So please make sure you understand that. Make sure you understand the difference so that when you try to build this account, you got to know what you're trying to do. Are you really trying to have a serious shot, and space out the money, have enough money for when the market goes crazy or there's a TLT or a real obvious play, or are you just gambling? I mean, and I know what I'm doing with this. So like a play like this is going to be gambling, waiting and sniping for TLTs, making these theses, like spacing in and scaling into some of these China stocks. Everything's gambling to a degree, but that's going to be a lot more better. It's a way better use of that money, especially on a small account. So now that we got that out of the way, let me direct you towards this small Robin. Ew, with all of these ugly colors, I hate it. But remember, this is the account I destroyed it, and I just bought the CMGs. We went for the big Amazon plays, but this was the Uber play. And again, it came down in value. So I grabbed 10 of these at 60 cents, and it's a 35 call. And why did I grab this play? The whole idea behind this play was this is what I said it yesterday on the watch list, and it just looked good, and it was cheap enough. It's $2 out the money, so it's almost 10%. It's about like a 6 to 7% move. There's a reason why you got it for 6 cents. And someone said something, you kind of do get what you pay for when options. Someone said that on stream. So shout out whoever that was. I like that, but it's true sometimes, but then sometimes there's inefficiencies, but you got to understand, especially on a daily, what that means. But the idea and logic behind this play is that you have the Grubhub Uber deal going on. And the thing about that is that I want to see how this plays out, because usually the deal's been going on for the last few days, and then every single day there's been an update. Really, if it's a serious deal and they're going to come close to it, usually relatively quickly after the news gets released, they make a deal. But that's what's going to happen. If it drags on, it may not happen again. This isn't every time, but that's why I'm saying I'm willing to take the $60 risk, because end of the close tomorrow, or maybe middle of the day, maybe in the morning, they say they made an agreement. Right now, Uber and Grubhub are arguing between Grubhub wants like 2.15 a share as the buyout, and Uber wants to give them 1.9. It's pretty much a $500 to $750 million difference of where they need to meet each other. So they could supplement that, give different incentives. We will see, but I'm playing on the market getting a nice little pop if that does happen here tomorrow. But again, that's a gamble, because you don't know. It's taking a roll, and I'm kind of willing to take that roll because I feel like the odds are going to be more in my favor on a weekly like this or a daily, because every single day there has been some level of buyout news related to both of these companies. So that is the first play, and then the next play is Facebook. I grabbed 5 of these May 15th to 12.50 calls at 7 cents, so I spent another $30 again. Another weekly, and the whole idea was this, because they started popping their after hours. Oh, did they drop? That's weird. Oh no, I don't. Why did it say 206? I don't know. I just tripped out there. But they went up on news that they're seeking acquisition, or they're looking to take over Revolve, and I like them as well too. But Revolve didn't move, and then Revolve apparently had good earnings, but they've been up a lot, big volume. It's weird because usually the one that was going to get acquired, they didn't move, but then Facebook popped up on it. It was weird, but I said, okay, I'll take $30 on that. And the idea with both of these plays, Uber and Facebook, they're dailies, and my logic was, well, $60 on one, $35 on the other. I could have won a lot smaller on Uber, and I should have, but because I could have got pretty much, I could have spent like $50 on both of those plays, like $25 each or $30 both ways, and spent $60 total. But even if I wanted to spend more money, my logic is I'm going to wake up tomorrow, wait throughout the day, and if they don't go in the money and we don't see a big move, those contracts will get cheaper. One's closer to the money will, and then that could set me up to kind of double dip if some of these theses or if some of this volatility or weird market moves occur as I'm expecting. So that's the logic with that, and I'm going to be looking at Revolve, and then finally I am going to be aiming for Wells Fargo and JP Morgan on the put side. I remember I said I've been watching this, but I don't know. I've been hesitating this. I called this out a few days ago. I never did it just because they were already low, and I was like, well, premiums are high, but my plan is to kind of sprinkle out some of these puts on them throughout time, kind of how I'm doing with the China stocks, and go little by little. But again, the difference was China stocks were up, so these aren't, and I don't like that. So I'm going to approach this different, but I want to look towards seeing how we could get our hands in the cookie jar for some of this potential dividend cuts, because I just like that line of logic, because it could really explain the big divergence here between the bank stocks and just the overall S&P. But as far as everything else, I'm not going to be watching much besides that. Again, there's going to be NVIDIA, and I don't know. I don't think they reported yet. I believe they're reporting next week. It's went up a lot. People saying I'm sleeping on it. It's expensive. So again, you guys have seen my strategy. If it's too expensive coming into earnings and there's a lot of premium, I don't have to make money on the run up because then I'm just going to short the shit out of it right before earnings. So we could sell premium if it's there. It always depends on what the market maker's telling me. So if I missed out even on the bank stocks. You have to pay with time and pay with opportunity costs, but when the catalyst that you were trying to play arrives, you could maneuver around that, or when it's coming near with selling premium. So if the contracts got too expensive for me and I don't want to buy them, it logically makes sense why I would want to sell them. It all depends on now what would I have to risk to collect that profit. So watch NVIDIA and then watch the bios, Guild, and we went over this a lot. I mean, CODX dropped. I want to sell some covered calls on that. Remember, we have the shares. They got literally like 3 different hit pieces all of a sudden. Like then they got like government stuff pulled, and then people were saying that they manipulated some stuff. So watch them. Again, I'm still holding the shares on those. Watch like INO and some of these other, again, even Guild. But one thing I called out, I lost money on my Guild contracts. We're still holding those, but we talked about it yesterday. Know what options are going to work. You guys remember the big Robinhood account right here? We had these IWMs, and remember, they're September. Oh my God, they came back down 50%. Damn it, no. So that's funny, but you can actually see though that's actually really good to even notice. They're down 50% total on these, but in the morning we were up on them, or they came back to break even. And now why I'm saying this is because they have time, and this is what I'm talking about. You're seeing this is volatility, and people are getting nervous. Know what works. If it has time and the market starts freaking out, they're going to work. But again, if nothing happens, you're going to lose. But it's better than doing these than the short term because, again, I still have till September, and you saw, we've been holding these for a month. So a month went by, you're going to hold them down, but then the minute some volatility comes by, what starts happening? We get all of our value back. That's volatility, but it's only able to benefit us because we have time. So that's what I'm saying with the Guild, that the contracts with time know what's working. So even in some of these moves, if you have longer term plays like this, and even if you want to establish plays, but you're holding some of them, these are protecting you in their own unique way, but you don't have to keep throwing money, and keep throwing it out on the short term and then just keep getting clapped. Not worth it. But that's that. And then LQD, HYG, I would watch them, and even TLT. And TLT is different, even though they follow each other. And be careful for this because TLT is not corporate grade. So it's not the same. Even though TLT is a fund and it's with government securities, though, it holds a different weight than HYG and then even LQD. But now the Fed is actually buying them. So again, and now it's interesting because LQD is dropping, but then or HYG is dropping in LQD, that's a divergence. So watch what happens here. But these might be unique to watch, and it may make sense why there's been a lot of call activity on TLT. But we had those August, and again, same thing with those TLTs. We were down like 50%. We were down a lot more, but the minute TLT starts popping up, they come back to life. So I'm going to be watching these, but let's let the bond market keep confirming. I mean, we don't need to go too crazy here, but at the same time, when they act slow, we act fast. When they act fast, we act slow. So keep that in mind. Things are moving kind of slow. This could be a good time to strike. Not necessarily on TLT, but mainly HYG and LQD. I want to take a look at those, but I'm not going to jump the gun. I'm not going to get called on a foul, baby. No. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to balance the budget. I need you to have it long term. I need you to chill. I need you to rest. I need you to relax. It's all good. Space everything out. Don't put that much pressure. Again, it is just the second quarter, literally and figuratively. We got a long game ahead of us this year with this news. Maybe last year you could have blown it. Maybe next year you could mess around, but there is a good opportunity here. So if you have money, it's not going to hurt you if you don't lose your money. It only hurts you if you lose it, baby. So I hope you're ready. I hope you're in the game. The code loves you. I love you. I'm going to see you in the morning. Let's go.